Hi, my name's Mark Burgess and I'm from Protiviti. I'm here with my colleague today, Phil Doran, and we're here to talk about the Royal Commission into Financial Services. So Phil, what are the immediate impacts arising from the Royal Commission into Financial Services?
Mark, I think it's fascinating how balanced the final report was, because there was a huge amount of drama during the Royal Commission. We had ambulances, we had loss of CEOs, of chairs, but the Royal Commission final report was very balanced in its 76 recommendations around thematics of what the financial service industry needs to do to improve itself. And the government has said that it is intending to action all 76 of those recommendations.
Obeying the law, that seems a bit of an obvious one, Phil. What and how can institutions possibly be getting that one wrong?
Yeah, Mike, it's an interesting question. The challenge with a lot of the laws and regulations associated with financial institutions is it's principles based. So it's very broad brush sort of requirements, and then it's up to the interpretation between the regulators and the organisation as to what they mean. Therefore, the organisations recently have been pushing the edge of the legality of all of that. Hayner has been particularly critical around the regulators of being far too lenient in the way that they've interpreted that law.
So if we move to a simpler set of laws and we remove the loopholes, how does that drive and achieve better customer outcomes? What's the misbalance or imbalance at the moment?
Well, actually in the report, Haynes said the laws are the right ones, they just haven't been particularly well policed. So he didn't necessarily point out any loopholes, and Haynes arguably likes the current regulatory regime that Australia has. It's not a prescriptive regime like there is in the US. So he thinks it's the right set of laws, they're just been badly implemented and badly policed. So it'll help the customer in terms of if organisations focus on the customer's best interests, genuinely focus on the customer's best interests, that will help the customer clearly.
Yeah. And at the moment you're saying there's a skew towards the shareholders and other stakeholders,
absolutely,
rather than just the customer.
Yeah, absolutely. And a really interesting example is in any trustee business, so superannuation, life insurance. The trustee in theory is there to act in the customer's interests, but even they have been tainted by focusing too much on shareholder profit.
Phil, what are some of the longer term impacts that we can expect to see change and long-term and lasting change across the financial service industry?
Mike, I don't think there's any doubt this is a fundamental sea change for financial services in Australia. The report talks a lot around the better management of non-financial risks. These traditionally are operational risk, reputation risk, those types of things. And in fact, a lot of our clients are now setting up non-financial risk committees to focus on those. Particularly with the banks, traditionally they're very much focused on credit risk, market risk. Now they're very focused on their other set of risks and how to manage those. Other organisations are following that lead as well.
And as you touched on earlier, there's going to be a lot stronger and immediate regulatory intervention. What sort of areas will they focus on, for example, in superannuation?
Oh, look, it's quite extraordinary how vocal the regulators are now. In terms of superannuation, they're very much focused on members' best interests, conflicts of interest, the quality and integrity of the trustee boards. And we've seen a lot of movement around trustee boards now with a lot of new appointments. The number of trustees that fronted up to the Royal Commission didn't present themselves particularly well and really struggled to articulate how they were acting in the members' best interests at all times.
And how about the insurance sector? What changes can we expect to see there?
There's certainly express provisions around non-hawking for insurance. And they're caught up in this overarching issue around making sure that they're at least adhering to the minimum set of the laws, if not going beyond it to a higher standard.
And in terms of broker-led distribution models, what can we expect to see there?
Well, yeah. Everyone thought it was the death knell of that industry. With some of the recommendations in there, particularly the recommendation that a client needs to pay the costs of the brokerage up front rather than the lender or the other product provider. So the view from the broking industry was that there's no way that's sustainable, that it's a huge, particularly around a mortgage, the cost of that up front is enormous. And first-time buyers, there's no way that they can afford that up front. There has been a bit of a clawback from the political parties saying that they won't take that interpretation, they won't take that recommendation into legislation. So there has been a rebound in share prices of the listed broker businesses. But it certainly is a challenge for them as to how they make sure that they're relevant in the marketplace, particularly because the banks, I think, desperately want to get that market share back from the brokers.